A little while ago, I made a video about warnings of a possible recession with the inverted bond yield curve to kind of explain the situation our US economy is sort of in. Now, I'm going to add on to that with October coming up, our most volatile month this year, and I'm going to talk about how to trade when confidence is low or even during a recession. So we'll get to that right after this. Fears rise as economic growth slows, and the Fed has cut rates again for the second time this year to keep that from slowing from happening. And that's a problem to economists and investors when they see an entity like the Fed that is designed to bail us out of bad situations unnecessarily take action by cutting rates when the company slows, or when the economy slows. Americans actually now have more disposable income than previous years. In fact, incomes have risen 3.1% this year, so Americans overall are doing better than before. Household wealth has grown so far and disposable income is growing, but the Fed still decides to cut rates again. And this article is explaining why it's such a problem to cut interest rates when the economy is okay and the overall household wealth is doing great and improving over the years. And that's a problem because the Fed is designed to bail us out of bad situations. Things like a slight economic slowdown or fears of a recession doesn't justify the needing for a reduce in interest rates. Because when you reduce them when we don't need them, it's going to pose a bigger problem when we actually do need them and we don't really have any rates to cut because they've already been cut. Having said that, I want to go into industries that tend to operate well or even thrive in a recession. First are the discount retailers. These companies tend to work better in economic downturns because they provide goods that people will see as a good deal. Consumers won't want to buy nicer or more expensive brands during a recession, so they'll turn to stores like Walmart, who actually suffers more during economic growth when consumers don't care to find such good deals. And here's a quarterly income statement from Q3 of 2018, Q4, then Q1 of 2019, Q2 of 2019. You can see that the income has actually kind of staying flat for the past few quarters, but when we look at annually, we'll actually see that income is declining because of the economic prosperity we are experiencing or we're going through right now in America. So Walmart is not doing so well because people are buying nicer things and they're not looking for a discount retail store or places to save money necessarily. Second is the healthcare industry. No matter what happens, people will always get sick or need to go see the doctor or buy prescriptions because healthcare is what you would call something that has an inelastic demand. So no matter what, this is something that people will need. So keying in on some healthcare stocks, I like CVS and Johnson & Johnson. And after looking at CVS and J&J's income statements, they're showing some profitable quarters and they're continuing to grow each quarter. Quarterly, CVS has done very well since the Q4 of last year. They've been increasing in income, and I really like this stock a lot. J&J too, a very good growth for the past quarters, so these are good picks I would look out for if a recession were to happen. And obviously I wouldn't buy them now because they seem a little overpriced, but so does the whole market. And I'm calling these stocks as a valuable investment during a recession if one is to come. I'm not telling anyone to buy now. I'm just letting you know that what I think are going to be good plays in a possible downturn. Lastly, the food and beverage industry. When the economy is suffering, there's always a demand for food and drinks, especially when that food is cheap. Companies like McDonald's are going to do great at this time as well as now when the economy is in a state of growth. With their recent 8% dividend and growing income, the stock looks good. There's just an ever-increasing annual income by this money-making machine. McDonald's is it's an asset to American culture. sadly, but it is a great money maker. So I think this is a really good stock to watch during a recession. So that's all I wanted to share with you guys today, and hopefully you found some worth to that. I know this is a popular subject in our markets now, so I figured I'd make yet another one about how to protect your portfolio in the chance that we do end up in an economic downturn. So I just want to thank you all for taking the time to watch this video. It means a lot. Thanks for all the likes and subscribes so far, and I will catch you guys next time on Frank's Trades. Have a good one.